week in review. We're going to be looking at the trading week of October 20th, 2025. As far as data goes, we don't have much. The thing to note here this week, as well as it has been for the last couple of weeks, is with the government shutdown, the release of scheduled data is either delayed or canceled. So some of what's on this is not going to be coming out, or if it does, it could be either a different time, different day. I don't really know, but as far as what's happening, data is delayed. So we'll run through this just to get through it as well. And then we'll talk about earnings quickly as well after. So Monday, no major data. Tuesday, we have Waller speaking twice, 9 a.m. and 3 p.m. So I would note that. Wednesday, we have crude oil inventories for trading oil. Thursday, we have 10 a.m. existing home sales. And then Friday, we have CPI on the calendar. And again, I'm not sure if this is actually going to be coming out. I doubt it very much. Then 9:45, we have manufacturing and services PMI, 10 a.m. consumer sentiment, and 1-year inflation expectations. As far as earnings go, got some big ones. Coming out. So Tuesday before the bell, we have Coca-Cola as well as GE. As far as market moving implications, there's not much there. But from broader market perspective, will definitely be very interesting to see how those companies are reporting, especially Coca-Cola. After close, we have the start of tech earnings. We have Netflix reporting after close on Tuesday, so be aware of that if you're looking to be in any tech positions, especially on the NASDAQ. And then Wednesday, big one as well, we have Tesla after the close as well as IBM. IBM I'm interested in personally just from the quantum side of things. I think IBM is probably going to be the leader, is currently and probably will be the leader in the quantum space. So it'll be interesting to see if they have any comments on that as far as guidance goes, because that's obviously a very hot sector right now. A lot of controversy around that too. Thursday, we have Intel after the close, and then Ford as well, which I'm watching, which again, just be interesting. Procter & Gamble Friday before the open. That's a really interesting one, mostly because of how many companies fall into the P&G umbrella, and looking at what their projections from a guidance standpoint will just be interesting, because it'll tell you a lot about the overall health of the economy. So interesting to watch that. Again, PG is not going to be market moving, but just it's going to be interesting to see. So probably a relatively quick video this week. I don't have much to add from what I talked about last week. So obviously the week before, we ended with this gigantic liquidation on Friday. Talked a lot about that. Talked about what I saw, what happened, as well as what these blues mean, and we have more of them firing this week. This time down into the low. So this entire week was spent inside of Friday's range. This entire last week was spent inside Friday's range. So we have an inside week effectively, which gives us a really nice trading range to work around. So one of the things I was saying, if you follow me online on Twitter as well, is that anytime we have a big, huge single day liquidation like this, we have a huge range put in. The tendency to backfill this poor structure is quite high. And a lot of the time what ends up happening is we start forming trading ranges around this poor structure, and we essentially basically just filled out what happened Friday, and we spent the entire week doing that. When we have stuff like this happen, you can expect violent two-way tapes. So you're gonna see really good trades from the highs and really good trades from the lows. VIX has been elevated, volatility has been up, so we've had really nice movement in both directions this entire last week. So could have easily made money on the long and short side, long or short side, whichever you prefer trading. There was really good equidistant opportunities on both sides of this range the entire week, and that's very much expected when you have big moves like this if you don't have immediate continuation. So as far as higher time frame goes, the monthly is still one time framing higher. The weekly is in a state of balance. So we're looking at a current state of balance here, basically on Friday's range. So down into 65.90s, up into 68.07s. And again, we're basically range bound until we either have a catalyst or we have some momentum outside of this inside week's range. So the same is true on the NASDAQ, but what I'm looking at primarily this week is using last week's value as basically the gauge to test either extreme of the week. As far as where I stand from a general perspective, again, when I see blues, I've talked about these in a lot of videos, but when I see blues start to print for me, That's indication of the market is trying to find extremes of range. It is trying to move back in the other direction. So obviously we had them up here at the highs. We had a huge nuke down, and now we're starting to print these into the lows. This pivot down here, 6640, has been a critical level across higher time frames. So seeing these start to form down in 6640 last week was not surprising at all to me. We didn't have any settlements below when these printed. So as far as that goes as well, I'm still in the camp of when I see these and I don't see settlements below them, so I don't see days closing and settling below these prints, I'm generally looking for the move opposite way. So I'm looking for a move higher, generally speaking. Obviously, we're in weekly balance. We are basically in the center of last week's range. We're basically closed very near last week's POC. So as far as directional edge, when you're dead set in the middle, from a discretionary standpoint, there isn't much. But when I see these start to form, my lean, at least for the time being, is looking for the continuation higher, basically looking for us to break out of this range higher and get up into larger extensions above and new all-time highs. So where I'm looking, first thing, I'll be using last week's value as a gauge. So the 6720 down into 6653, we have a very nice balanced weekly profile last week. So what I want to see is tests of either of these extremes. So if right off rip, we have a continuation from this neutral extreme up close day, which generally you look for continuation in the direction of the up close on a neutral extreme day. If we have continuation higher, I'm going to be looking at 6720s. If we can get above and start bidding 6720, so if we see a nice break and retest potentially of 6720s, I'll be looking for the extreme of last week's range. I'll be looking for last week's high. So basically old prior balance, the old prior all-time high balance range we had at 6750s up into 6760s. I'll be looking for that to be tested above 6720s. I will not be looking short up in this range unless I see a very significant fail of 6720s or a very significant fail of 6750 to 6760. My general thought process here is looking at how this range has consolidated, looking at no acceptance whatsoever below even the ETH low from last week from the sell, no acceptance below this Friday sells POC. Seeing these blues print, these are things that tell me that unless something is breaking as far as from a price action standpoint, I shouldn't really be looking for a larger move down. So if we see a really nasty fail up in last week's high, so basically if we see a huge amount of volume get jammed up into the inside weekly high, and we see a fail, then that to me is potentially a short trigger to look for the moves back down. If we can't accept outside of last week's inside range, so basically an inside bar failure to break, then we'll be looking for that short trade. But that's really the only way I'd be looking for a short trade up in this range. If we see a really huge amount of volume get jammed up here and a strong seller enter the market and take us back down. I would be looking on the short side if we start losing 6640s, so we start accepting below these blues that fired. If we start accepting below those, then I'll look for the extreme of last week's range and the bottom of this weekly balance, and then a bigger decision will be made down here into 6590 to 6570. We'd have to see, but big thing is we have guardrails basically. So if we're accepting outside of last week's value area high, I'll be looking for last week's high to be tested. So this 50 to 60 range. And if we're accepting below last week's value area low, again, if we puke below 6650s, then I'll be looking for the bottom of last week's range down into 6590s, the RTH range, the 6590s and the 50-day moving average to be tested again. Either of these extremes could give us either a continuation or a failed continuation trade. So again, if we do see a situation where we're down into the bottom of this current weekly balance, the bottom of last week's inside range, and we see a lot of volume on the sell side get jammed down in here, and then we rebid last week's RTH low, then again, that could set up a really nice long trade to get us back up and traverse last week's range, last week's value. And the opposite is true on the inside weekly high. Again, if we see a lot of volume get jammed up in here and then a big seller enter the market, take us back down, we could get a reversion trade back down. So it's just basically playing the weekly as playing an inside bar break. So you want to look for a directional continuation on the inside bar break with successful bids, with people lifting through. or you want to look for the reversion trade if we start failing at that extreme, and potentially look for the opposite side of the bar, which in this case is a week. So just to keep it really simple. The same thing is true with the NASDAQ as well. So once this loads, it's going to be the exact same strategy for me on the NASDAQ. So again, we actually got a blue firing on Friday. Again, not necessarily in a surprising place, down at the bottom of this current weekly balance range. So again, we spent the entire week inside Friday's range, basically violent two-way trades inside the entire time. We have an inside week that's formed. We have the inside week low, inside week high. And again, I'm going to be using last week's value area high, last week's value area low as the gauge to test either extreme. So again, generally my lean here is looking for continuation higher based on the close we had on Friday, based on the fact we have blues, based on the fact that we have no ability to sell below last Friday's sell. But again, I will be looking for the short side of the trade if we're accepting below 24,700s to test the bottom of last week's range, or if we're seeing a lot of volume get jammed up into last week's high and a failure at last week's high with a strong seller that enters. The big thing for me really is that I don't want to fade. I don't want to fade a directional move away from an inside bar, an inside weekly bar break. That's the big thing. So we spent an entire week consolidating. We spent an entire week establishing a balanced profile. These have, the ability to offer some very significant moves on acceptance outside. And again, my general lean is going to be looking for those long continuation trades as long as, we can see some acceptance outside of last week's value area high, and if we can break through last week's high on both indexes. So I'm going to keep it really low, really simple, really high level. I'm open to either side of the tape. Obviously, I'm not, I'm not married to this having to go higher. But I think as far as, at least from what I'm seeing, aside from the fact that we do have some news out of NVIDIA this weekend with some China stuff, aside from that, at least from a price action perspective, I don't see anything that's alarming to me, that says we're going to go drastically lower in the short term. Obviously, that view can be wrong, but that's just how I see it for now. So pretty simple. Play the inside weekly range, play the breaks, play at extremes. I know a lot of people probably got really chopped up on the inside of this. Really, when you see, an outlier day like this, I think there's a 4% down day, maybe more as far as ETH range goes on the NASDAQ. Yeah, it was 5. Basically 5%, 1,200 points down on ETH range. When you see big moves like this, it's really easy to it's especially easy to get caught up in the mindset of, oh, this has to continue. And a lot of the time, that's just not at all what happens. So if you got super bearish when you saw this, it's understandable. Really, when I see moves like this happen, the first thing I actually think to myself is, okay, is this an overreaction? Are there things telling me that, this should continue immediately? Or are there, or is there a good possibility that, this could turn into a fairly large trading range and turn into some chop? So when I saw the blueprint on Friday, the Friday prior, the first thing that jumped out, I actually tried a long here, and obviously I took a loss, but the first thing that jumped out at me was, okay, I know I built this to tell me when not to be an idiot. So I saw this start to print, and my immediate thought was, okay, market is clearly, going lower, but we're at what the book is trying to do, at least based on what this is looking for, is trying to find some sort of base. And we opened the week right at it. So validating in the sense of, even though I took a loss on Friday looking for this, validating in the sense of like, okay, well, it actually does work, because this was ultimately the end result. So I know there's going to be talk about taco trades and whatnot, and like we could see more. One Trump tweet could completely change the direction of this market, so that's obviously something that we need to consider as well. But the big thing is, like, when we have poor structure like this, even before I was using stuff like this, it's more for me. I just wait. I wait to see, okay, is there directional continuation immediately, or is this market trying to find some sort of footing in either direction, whether it's up or down, based on the extreme of the day that we had. Obviously, the big down day. Should we be looking for immediate continuation, or should we be looking for some sort of trading range form? So, huge outlier day that we had on Friday. We had a massive ETH gap up. So I mean, we closed the ETH session at 24,190s. We opened the following 400 points higher. So obviously, when you see this happen as well, at least for me, I immediately go, okay, well, we're probably going to spend a lot of time just basically backfilling this and figuring out what the market wants to do. So I'm not married right now to a directional bias. I do have an upside bias just based on what this is telling me in the short term. So we'll have to see if this plays out. But again, I think the big thing is just be open to either side of this. If we're staying inside this weekly range, be open to both sides of the tape. There's really nice rotations, really nice opportunities on both sides here. So hopefully this helps. I think it's a fairly straightforward week, at least as far as what we did last week. Gives you some guardrails to look for. If you like the video, please. If you haven't subscribed to the channel, please do that. And I hope this helped. Thanks for your time.